Hi, and welcome to a special tax and legal debrief session following the long-awaited voting of the transfer pricing legislation. My name is Irene Marangou, Manager in Deloitte's Transfer Pricing Services Department.
And I am Koralia Drakou, Assistant Manager in the same department. Together, we will provide an overview of the key provisions of the Cypriot transfer pricing legislation.
Transfer pricing refers to the rules and methods for pricing transactions between connected parties. Because of the potential for cross-border control transactions to enable profit shifting for tax purposes, tax authorities in many countries can adjust intra-group transfer prices that differ from what would have been charged by unrelated parties, thus enforcing the so-called arm's length principle. Although Cyprus has codified the arm's length principle in its tax laws many years ago, the requirement to comprehensively document transactions with related parties has only just been introduced. As such, the new legislation introduces TP documentation requirements for Cyprus tax resident companies engaged in transactions with connected parties, which exceed certain thresholds, and they will apply for tax years starting from 1st of January 2022 onwards. The rules also apply to permanent establishments of non-Cyprus tax resident companies. The legislation introduces a 25% direct or indirect relationship test for assessing whether parties are considered to be connected. If the conditions of this test are met and the relevant thresholds are exceeded, TP documentation, known as local files based on the OECD standard, will need to be prepared. In more limited cases, requirements to prepare a so-called master file will also arise, namely for certain companies which file country-by-country reports on behalf of large M&E groups. Local file rules will apply if the aggregated value of the transactions with connected parties for each separate category of transaction amount or should amount to 750,000 euros and above per tax year. The relevant categories, for example, are goods, services, intellectual property, and financing. In addition to the TP documentation files, Cyprus taxpayers will be required to complete a summary information table containing high-level information on their transactions with connected parties, such as the identity of the counterparties, their jurisdiction of tax residency, and the value of the transactions.
If the local file and master file requirements for a particular year apply, the regulations provide that this should be prepared no later than the due date for submitting the taxpayer's corporate income tax return for that year. Based on current deadlines, this would mean companies will have 15 months after the end of the tax year to put in place their local files or master files. So, for example, for tax year 2022, based on current deadlines, Cyprus taxpayers should ensure that they have their TP documentation files in place no later than 31st of March 2024. In addition, the new TP rules require that an assurance quality review of the local file needs to be undertaken by a person who holds a professional practicing certificate from the Institute of Certified Public Accountants of Cyprus or from any other similar recognized body in the Republic. Similarly, the summary information table should be prepared for each separate tax year, and this will have to be electronically submitted to the Cyprus Tax Department along with the taxpayer's corporate income tax return for that tax year. If the TP documentation is requested by the Cyprus Tax Department and Cyprus taxpayers fail to provide within the required 60-day time frame, penalties will apply and will range from 5,000 euros to 20,000 euros depending on the length of the delay. In the cases where there is a failure to submit the summary information table, a penalty of 500 euros will be imposed on the Cyprus taxpayer. Lastly, the new TP legislation also put in place provisions for taxpayers to be able to apply for advanced pricing agreements. An APA is an arrangement that determines, in advance of controlled transactions, a set of criteria for the determination of the transfer pricing over a fixed period of time. The regulations state that the validity of an APA may not exceed 4 years. However, the Cyprus Tax Department has the authority to revoke or cancel an APA under certain circumstances.
As the new requirements are effective from the beginning of 2022, Cyprus taxpayers should begin considering the TP practices. Our Deloitte transfer pricing team is here to support you with assessing the impact of the new rules, taking into account the thresholds and volumes of transactions, undertake benchmarking and assist in establishing policies for the pricing of controlled transactions, and establish a plan to put the required TP documentation in place. Thank you for watching.
And stay tuned for further updates.